So good morning. I'm pleased to be joined today by Karel Lannoo, the CEO
Morning.
of CEPS, Centre for European Policy Studies, think tank here in Brussels, to talk about the UK-EU relationship and the TCA. And specifically, Karel, we now have this new Windsor framework agreement between the two to try and iron out the difficulties with the Northern Ireland Protocol. That sounds like good news. How do you think that's going to affect UK-EU relations?
The way I see it is also, as you say, Nick, it's good news. It's good news for the EU, it's good news for the UK. And I think we will slowly restart our relationship, and probably in the next 2 or 3 years, we will be back to a level not like we were as a member, but we will have, like with other countries, like with Switzerland or Norway, we'll have a normal relationship and we will cooperate on many different levels together, which we didn't have until before the Windsor Agreement.
And in financial services, the TCA only had really this provision for setting up a dialogue, to set up a joint regulatory forum, a little bit like the EU has with the US, I guess. Does it unlock that? And is that helpful for financial services, do you think?
I think it would unlock this. That's at least what we read about this. Of course, there are some people who say no, there are still so many, other conditions to be fulfilled, certainly on the UK side. But I think the way I read it, just the fact that von der Leyen went there, not Šefčovič, not the Vice President Šefčovič, but the President of the Commission. She was pictured widely with Sunak, with the Prime Minister. I mean, it's just to give a sign that probably what we know already, that we don't have a good relationship with the UK, certainly in the financial services field, it will negatively affect both of us. That more business will go to other jurisdictions, certainly, of course, the US, but certainly also other jurisdictions. And that's already happening as we read the news, let's say in the UK, that there is less capital market activity, etc. That's probably what the EU also says, because there are no other countries which at the moment can compete with the financial services business which is being offered in the UK. And that's probably, if we start from a basis of more pragmatic cooperation, signaled at the highest level between the EU and the UK, I think we can reestablish something, as I said, in the next 2 to 3 years, that we're back to the level of a good, solid cooperation, not an ideological or dogmatic fight between the two, but a good cooperation which is in both interests.
And do you think that having that kind of deeper regulatory dialogue over the next 2, 3, 4, 5 years could actually lead to unlocking equivalence, to use the European term, or mutual recognition, and that the two sides can actually begin to talk about mutual market access again? Or is this essentially just a dialogue about regulatory alignment in the broadest sense without mutual access?
For me, it would be both. Let's say, certainly, as we know, as we've argued often, we have more equivalence with jurisdictions like China or Saudi Arabia than with the UK. That doesn't make any sense. I hope, let's say, in the next 2 to 3 years, we'll have, again, on many different areas, formal equivalence decisions between the EU and the UK. Not only one, the only one which is left for clearing. But I think it should thus be broader than only kind of a memorandum of understanding which we conclude between supervisory authorities for supervision of entities which are active on both sides. It should go much further, and they're establishing a bit the kind of cooperation which we used to have before.
And specifically on clearing, what happens on clearing?
Yeah, we've seen this latest piece of regulation which is proposed by the Commission at the end of, 9th of December. I wonder whether this is good news also for European banks, because European banks are required to set up active accounts within the EU, which requires them to split up accounts or split up kind of positions with the UK entity, and then eventually in the future with an EU entity. Of course, some have started to do it already. But what we've learned from a study which we did a year and a half ago is that European banks are extremely concerned, large European banks, that they will be disadvantaged as compared to other players, US banks, Japanese banks, Swiss banks, which will not have necessarily to set up this other accounts within the EU. Of course, there are financial stability reasons for doing this, but that's why we have EMIR 2.0, just to make sure that we have a good supervisory cooperation between the Bank of England and between ESMA, and that ESMA is allowed to control entities, even in third countries, even within systemically important entities, like in the UK. So let's work on that agreement before changing it again and see how it works. And on top of that, what the newest proposal is not doing as well is requiring or asking ESMA to supervise more. No, it keeps the supervision of EU-based CCPs supervised by their national authorities. So I don't see the logic for doing this if we have only, I think, 13 CCPs within the EU 27, and that then 27 member states have to enact legislation which requires them to supervise CCPs which they don't have. So let's ESMA do the task, which the Commission apparently hasn't dared to do, which apparently the member states do not want. But it's here the task for the Commission to look forward and to say what would be the optimal structure for the EU is to have a structure where you have ESMA, probably together with ECB, being the key supervisor of the EU-based CCPs as well.
Yeah, it is a good example of where you can end up with a win-win based on mutual trust rather than a lose-lose. Okay.
Of course, we know, let's say, that CCPs are involved in huge activities, which sometimes may have huge financial stability implications. But we have set up now a system through EMIR, I mean, the basic EMIR and the amendments to it, EMIR, let's say, for just with these, what we call this waterfall, there's many different levels of protection which are in place, just to make sure that, I mean, entities can act at many different levels before it comes towards to liquidating a CCP, which so far has not yet happened. But of course, there can be calamities like has happened with, for example, Nasdaq Europe as well, when there is a position of a trader which cannot be covered by the members. But if you have a good risk management system in place, which is the primary task of a CCP, then these things should be prevented.
Okay, we'll follow EMIR 3 with great interest. Thank you, Karel.
Yeah, pleasure.
Thank you to Karel Lannoo for joining me today.